This podcast is intended for investment professionals only. All investing involves risk. Hello and welcome to this episode of Market Talk, where we'll be talking about just where investors stand now that Kamala Harris is the clear Democrat frontrunner in the race for the White House. We'll be mulling over what was decided at China's third plenum, and we'll be looking at a change of equity leadership in the US stock market. So, as the curtain rises on the opening ceremony of the Olympic Games, sprinting through the questions for Team UK is me, Francis Watson, and going for gold with his winning answers, Ben Bennett, Head of Investment Strategy for Asia, and who joins us from Hong Kong. Ben, how are you? So much happening in markets since we last caught up.
Yeah, tons of stuff going on. Let's crack on and dig into everything.
Yeah, absolutely. We can't not put top billing, I suppose, US politics, which is dominating the headlines. I guess what's done is done. The most recent question appears to be, I suppose, how do investors interpret what we now believe to be the Trump versus Kamala Harris race?
I mean, the US election has been the focus really for the whole year, but the point is that it's in November. So up until couple of weeks ago, really. I mean, it was the first presidential debate, wasn't it, which sort of shone the light on it. Up until that point, I don't think investors were positioning or thinking about, the outcome. And we're doing some research, but not positioning for it. But then that's totally accelerated since that debate. And then, as you say, Biden dropping out. And now, we could talk about the trades in a few minutes when we talk about markets. I mean, they've started to really people have started to put the trades on right now, but there's still a long way to go. I mean, it's still not totally certain that Harris is going to be the Democrat nominee. I mean, we've got to wait for the Democrat National Conference, which is in the middle of August. I mean, I follow betting odds to try and work out what are the chances of various things happening, just to try and see what probabilities are telling me. And still, I mean, lots of people are talking about Trump being a very strong candidate because obviously Biden's dropped out, and then people don't know Harris as much as they know Trump and Biden. But the betting markets are still saying that Trump is barely above 50% chance to be the next president, which is not that much better than a coin toss, is it? So Still a long way to go. November's still a long way to go. So I think we're going to have a few ups and downs before then.
Yeah, I mean, I suppose one thing is for sure, heightened volatility, do you think, across markets?
That's definitely been, that has been the case since
all year.
Well, it's been the case all year, but the focus on the election now has increased a bit of volatility. Some really interesting market moves, which we should definitely dig into.
Yeah, okay, well, let's talk about those in a sec. But just going from the US to China then, and we've had a major Communist Party meeting known as the third plenum. It's just ended. What news has come out of that, Ben? Is it enough to pacify investors that China growth is on track?
This third plenum has been on the agenda for a while, actually. So just to bring it back, I mean, everyone talks about these different meetings. So just to say exactly what was going on. So there's a sort of 5-yearly process with Chinese politics, and then within those 5-year terms, there's, I think, 7 plenums, which historically look at various different things. The third plenum, which is the one that we're on now, historically has looked at economic reform. There's been a couple of big ones in the past, 1978, 2013, which have announced and put into process some serious, important reform, which really impacted growth trajectory for China. So this one was meant to be, it's usually in the autumn, actually. It was meant to be last autumn. They've been working on it apparently for quite a few months, and it's only just happened last week. After it's behind closed doors, so it's not on TV or anything. And after the event, they put out various statements, a short communique and then a longer statement to go into some of the detail. It's not obvious straight away what the impact is, as with a lot of stuff with China, of course. These plenums generally come from a very big picture type focus rather than looking at the specific policies. There has, but I'd say market reaction has been a little bit on the disappointing side. Chinese media are raising expectations for this plenum, saying, it's going to be very important. So the Chinese equity markets in China had been going up a little bit in the few weeks before the plenum. And we're sitting here on Tuesday, so it's only been a couple of days since we've had the final statements. But yeah, they are down a little bit since then. Most of the documents were reiterated. It was really just reiterating policies or ideas that are already there. So transitioning the economy away from the property sector, away from investments into more modern technology, reforms of the hukou, which is where people can live and what sort of benefits they can get, that type of thing. So just reiterating that. But there are a couple of interesting points. One was that they have put a timeline on these reforms. So they're talking about having them completed within the next 5 years, roughly, which is a long time. But actually, when you're talking about big reforms, that at least gets people to act, perhaps when they've been a little bit more reluctant to act on it in the past. We now know the idea is that this thing is going to happen over a set period of time. So let's get going on it. And also there was a focus as well on the more cyclical side. So the 5% growth target for this year, which had been slipping because we had some quite weak Q2 GDP. That was another thing that's happened over the last couple of weeks. That's been slipping a bit. And the communique reiterated that we are going to meet this 5% growth target. And lo and behold, what happened yesterday, the Chinese central bank, the PBOC, cut interest rates by 10 basis points. That's not a coincidence, is it, to come straight after that meeting? So perhaps, again, that will focus a little bit of attention on the cyclical nature. So a little bit of a disappointment reaction from the markets. But, I'm cautiously optimistic that we'll see more policies going forward, not just the PBOC rate cut. There's also going to be a Politburo meeting by the end of July. It's the July meeting. Maybe, again, we'll see a few more actual policies being laid out there and some actual action that we can have a look at.
5% growth in China. Of course, we would do great things for that, Ben, here in Europe. And talking of Europe, the European Central Bank met last week, wasn't expected to make a move on interest rate cuts, but the talk is of a 25 basis point cut for October. Is that still on the cards, do you think?
The ECB cut interest rates last month. So they started cutting interest rates last month, and then they guided investors, and I think everyone expects them to cut basically every other meeting. So it wasn't. They didn't cut last week, and that was expected. That was the meeting they were meant to skip, I suppose. And yes, you're right. They probably will cut next month. They keep reiterating, as everyone does, but particularly the ECB, that it's data dependent. So we'll see what inflation does in the next few weeks, to see if they can cut again. Next week, there's loads of central banks coming up, actually. So it's, the ECB was starting the calendar, but then next week we've got the Fed, we've got the Bank of England, we've got the Bank of Japan, all around end of July, beginning of August. And actually, those central banks might not do very much. The Bank of England might cut interest rates. It's not a certainty, but inflation's been a bit sticky. The Fed is actually expected to start cutting interest rates in September, rather than next week, because September will be the month when they redo their economic forecast. So they could well do that. And then the Bank of Japan could be interesting, because the yen, which had been under a lot of pressure, has just started to strengthen a bit, which is a bit of, they'll breathe a sigh of relief there. So we'll see what they do about that.
Yeah. Okay. Interesting. I was just thinking, actually, as you say about this raft of central bank meetings, do they never go on holiday, these bods? I mean, here we are in the UK, peak holiday season, shut up shop and then come back in September. Anyway, that's just a personal viewpoint. So let's look at market views then and where we are. Obviously, there's been a lot of talk about the Trump trades. We don't know if in a week or a month's time that's going to be out of date. But in essence, Ben, just touch on them. What are they, and are they still valid?
So we mentioned earlier that with the election getting a bit of focus, people are starting to think about, what sort of trades should we put on? So, Donald Trump, the odds of him being elected, and the odds, more importantly, perhaps, of a clean sweep of all the three different parts of government for the Republicans. So if they were to win the presidency, if they were to win the House of Representatives and the Senate, then they could start to enact the policies that they want to. Now, what would those policies be? Most people believe that it would be generally higher inflationary type policies. They they would cut taxes possibly. They'd look at immigration, maybe reduce immigration. They'd put tariffs on. All these things could lead to higher inflation. So if that's the case, maybe you want to reflect that in terms of higher bond yields, particularly at the long end of the curve. Now, the place that we look at a lot is the steepness of the curve. I mentioned that the Federal Reserve could be cutting interest rates as early as September because we've had lower inflation. So since, let's take the Friday before the debate, the Biden-Trump debate as our starting point. So that was the 21st of June. And taking that up to yesterday's close, so that would be Monday, the 22nd of July's close, so almost a month. The 2-year bond yield fell from about 4.7%. So that's down 20 basis points. That's because inflation's been falling and the Federal Reserve will cut interest rates. The 10-year point has stayed basically flat, 4.25% to 4.25%. So what you can see is that lower interest rates has only been reflected at the short end, not at the long end. That means that the curve has steepened a little bit. It's still actually inverted. The 10-year point is still lower than the 2-year, just I guess less than it was before. So that's one of the trades that's been good. The other one, which is interesting for equity markets, is that domestic stocks have been doing a little bit better, or quite a lot better actually. Again,
Yes,
that
I
might be
saw that. Yeah, the US small caps. Yeah.
That's right. So this is the perception that Donald Trump could be cutting interest rates domestically, stoking domestic growth. So we've seen the index that we look at a lot is the Russell 2000. That's US small caps. That over that same period of time that I'm talking, that sort of month that I was talking about earlier, that's gone up nearly 10%, which is a huge. And up until that point, it had been basically flat on the year. Over that 1 month, the S&P is only up 2%. See, so the small caps have outperformed the S&P by about 8 percentage points, which is pretty large. So those are the big picture trades that people are thinking about right now. But remember the context I said earlier. This is far from a done deal. So Trump trades might start reversing if Kamala Harris suddenly becomes very popular. Who knows?
And in that leadership, we've seen the rise of the US small caps, but we've seen an awful lot of volatility, haven't we, in the Magnificent Seven and the big tech?
Yes. Now, I think that's interesting because I don't think Donald Trump would be bad for the Magnificent Seven. That doesn't seem to be sensible, does it? But I think just that rotation into the small cap stocks, which had been relative underperformers up until that point. So that rotation back into those stocks did, as you say, cause, I think, some volatility in the relative winners, the Magnificent Seven so far this year. Because I guess to buy something, you've got to sell something. I think that rotation, that switch of leadership within the equity markets has also been brought about by these sort of Trump trades.
We have got results from the first two of the Magnificent Seven. I think Tesla and Alphabet tonight after the bell, haven't we? Of course, we're bang smack in Q2 earnings season. So what are thoughts generally, Ben, about the Q2 results?
We were all talking about this rotation and shifting and Trump trades, blah, blah, blah. But ultimately, what it boils down to is how well these companies perform in terms of their earnings. And we're trying to forecast that ultimately over a period of time. So Q2 earnings season, which has just started, it's always really important to look at these earnings. The overall S&P 500 is probably going to increase their earnings by 10% versus last year, the same period last year, which is still very good. US growth, as I've mentioned earlier, has been a little bit weaker just recently. The inflation's been falling, but we've also seen slightly weaker retail sales, industrial production, that type of stuff. So looking forward, maybe those earnings will be under some pressure. Who knows? And we'll see what the policies are around that. But right now, it still seems very strong. So, maybe we'll see a reinvigoration of the Magnificent Seven trade if they all do incredibly well. But, there's such a focus on these names. The other focus that we've had just over the last few days has been on Europe, our European earnings. Some consumer-facing luxury goods manufacturers have announced weaker than expected earnings. And this might actually be the China weakness feeding into the rest of the world. It's people often ask me, I mean, you've asked me in the past, like, why should global investors care so much about China? If they're not invested in China, why does it matter so much? Well, lots of companies, particularly in Europe, sell lots of stuff to Chinese consumers, and if they're not doing very well, then they might not sell so many things. The other stock that would be interesting again tonight, LVMH in France, of course, that's a big luxury producer, isn't it? So
Love them.
we'll be able to gauge perhaps with them just what's going on with some of the demand that they've benefited from over the years from China, of course.
One day, Ben, I will save up for an LVMH hold all to add to my luggage collection, but not now. Well, look, we have got lots of earnings on the horizons, and as you say, lots of central bank meetings scheduled for next week. But irrespective of whether they take a break or not, we're going to take a bit of a break. So for August, Ben, then, because that's when we're going to have a bit of time off, what's your number for August and why?
Yeah, well, I need a bit of time off in August because my number of the month is 31/8, so 31st of August, which is when I'm going to get married, Francis. So that's all set for the end of August. So that's a good reason to have a little bit of a break, but be reinvigorated and ready to go fresh for September. That's the plan. Anyway.
Yeah. Well, listen, Ben, I know everyone listening to this will want to wish you all the very best for that wedding. I did happen to hear the news because you were over in the UK a couple of weeks ago watching the cricket, as you always do, and you did tell me then, and I'm hugely happy for you, and many congrats to you both. So look, have a wonderful time off with Mrs. Ben, and hope it all goes very, very well. And as you say, you will be back with more Market Talk in September. But for now, from Ben and me, thank you for listening and goodbye. As a reminder, this podcast is intended for investment professionals only and shouldn't be shared with a non-professional audience. The views expressed in this podcast are those of Legal and General Investment Management Limited, as at the date of publication. This podcast is for information purposes only, and we are not soliciting any action based on it. The information discusses general economic, market, or political issues and/or industry or sector trends. It does not constitute research or investment, legal or tax advice. It is not an offer or recommendation or advertisement to buy or sell securities or pursue a particular investment strategy. Assumptions, opinions, and estimates are provided for illustrative purposes only. There is no guarantee that any forecast made will come to pass. No party shall have any right of action against Legal and General in relation to the accuracy or completeness of the information contained in this podcast. Where this document contains third-party information, the accuracy and completeness of such information cannot be guaranteed, and we accept no responsibility or liability in respect of such information, not for distribution to any person resident in any jurisdiction where such distribution would be contrary to local law or regulation. Copyright 2024. Legal and General Investment Management Limited is authorised and regulated by the Financial Conduct Authority. In Hong Kong, this material is issued by Legal and General Investment Management Asia Limited, regulated by the Hong Kong Securities and Futures Commission. For full terms and conditions, please visit our website. To find more content, you can check us out on X, formerly known as Twitter, LinkedIn, and our website.